It's finally silent and I can speak freely for once. Ladies and gentlemen, welcome to my couch of silence. I'm not going to get interrupted. I'm not going to have to listen to any gibberish from anyone either side of me. It's all me and you, finally. Like the good old days, actually. Hello, and thank you for visiting jaymcinnes.com. I'm Jay McInnes.
My name's Jay McInnes.
Hey guys, Jay here.
Hey guys, Jay McInnes, your Vancouver first-time condo buying specialist.
So today, I'm going to take this opportunity, this grand opportunity to do a summer roundup. What the hell has happened? And I know we poke jabs at our beloved economists for saying they have crystal balls, so on and so forth, but I'm going to do just that and give a little fall forecast just to keep things a little bit spicy. So to start today, I'm on the Bank of Canada's website because they have been the, as you know, my belief on why things are crazy has nothing to do with inventory. I think that's a secondary issue to this, but the rates obviously during the pandemic got dumped down. When money is cheap, people take it, and the market has taken off. That's all the Bank of Canada's policy, of course. And then we are now, as of March 2nd, in an increasing interest rate policy. So as we've seen, that fluctuation of the easy money and now the tighter money has totally dictated the ebbs and flows of the market we've seen over the last 2 years since the pandemic. So just on their website, I'm gonna touch on a couple things. So as we know, the market rate now, or you may not know, inventory listings are down, sales are down, everything is suppressed at the moment. And when big changes happen, like for example, as we mentioned before, the foreign buyers tax was a big change, it shocks the market, everyone pauses and waits. The rate increase that the Bank of Canada has given us since March 2nd, which I'm going to get some details on in a second here, was the big shock, and everyone's kind of still sitting back and waiting, both buyers and sellers. So looking at the stats, Canada-wide, which I don't like to talk about because it's irrelevant because we only deal in Vancouver. From my perspective, everything's relevant, but not my cup of tea. Canada-wide, from the stats I've read and seen, about 60% of people are, I think high 60% range of people are homeowners as opposed to renters, and then the majority of that are mortgage free. So that's going to vary obviously in different sections of our country. Toronto and Vancouver being much more speculative led markets, growth markets, if you will, as opposed to some smaller places will have that number shifted. But we've got low inventory now, we've got low sales. So typically with a changing market, you would see an increase in inventory once the sales go down. So what we're really seeing is a lot of people hanging on. We're seeing listings go up. The stats on that I've got here as well. So new listings are down year over year 9.5%. We talked about this last week. Since June, so month over month, we're down just under 25%. So what we're seeing is new listings are going up, and they're staying up for a very short amount of time. And if people aren't getting the activity they want, they're simply pulling it off. So we're not seeing a massive, we're seeing downward pressure, but we're not seeing a massive amount of listings get fire sailed out the door or anything like that, which is quite interesting and quite unique for this market. When you see these things, you usually see when markets are falling, people are trying to get out as quickly as they can, more of a stock market kind of falling circumstance. But this time around, it's been a lot different. We have seen, obviously there's downward pressure as the price of money goes up. If there's $1 million condo that sells when the borrowed money is 1.5%, and now that money is 5.5%, is that condo still worth $1 million? Well, probably not, but we're not seeing people reduce. You're getting some of it, but you're not seeing a massive outflow of reduced and adjusted product. You're just seeing a lot of inventory coming off. So this is very strange. Generally speaking, there's a lot of confidence in the market that they don't have to get out. We are not at a point yet who's on the brink of foreclosure or anything like that. On the ground here, looking at the market every day, we're not seeing an abundance of foreclosures or issue sales like that. So we're really seeing people holding on, if they're not getting the prices they want, which are obviously ideally more reflective of markets past, kind of the first quarter of the year being the peak, they're just not selling, which tells a lot that there's a lot of kind of ownership stability when it comes to financing. Now, there's also these fixed term to variable rate mortgages. That's going to change things as people's cost of ownership goes up. They can obviously lock in. There's a trigger rate equation. We're not going to go too much into that, but everyone has their circumstance, and across the board today, they've shown consistency. Like, they've all called each other and said, let's just not sell. If we don't sell, the market doesn't drop. That seems to be what's happening. So when we're going out and pricing places, anywhere from entry-level stuff under $1 million to kind of those $3, $4, $5 million properties, we're seeing just bigger and bigger gaps in sales history. So what does that do? That typically works in favor of the buyer, of course, with the caveat if the seller is willing to take the lower price, which we are really not seeing a consistent amount of yet. I don't know if that's going to come. Personally, I don't think it is. We're going to get into my forecast in a minute, but yeah, that's kind of where the bulk of the market is at here in Vancouver. We do a little bit of work up the Sunshine Coast as well, a secondary market. So you've always got in those secondary markets, being Sunshine Coast, Seashell Gibsons, for example, more so, I mean, the outskirt communities from Burnaby, Coquitlam, all that aren't secondary markets, but as you leave town, we talked last week again, we've had some price decreases, sorry, in the double digits, kind of closer to 25% in sales out in the valley where things really picked up in the Coquitlam area, for example, and then have really adjusted. But coming from Vancouver and looking at the secondary market up the Sunshine Coast, you're getting a lot of that reduction. Obviously, if people are under financial stress and they want to start moving things, those secondary market properties are going to go first. Obviously, you're going to sell your cabin before you sell your house and move your family to something smaller to be more conservative. So we're seeing still not a huge amount of sales in that secondary market, but we're definitely seeing the softening taking place, a lot more reduction, as opposed to people pulling off like we're seeing commonly in Vancouver. So that's the blanket. I've got notes here. I don't typically like to follow them. I just make sure I've got all that covered. So yeah, back to the Bank of Canada website, just to give some insight on two things. So the policy rate today, as of mid-June, is 2.5%. I just want to give some insight here, which I felt was interesting, as it's been such a blur. So March 2nd, you had an increase of 0.25, and then they've basically gone every month. So we had the 0.25, the 0.50, the 0.50, and the 1%. So there's been 4 increases, totaling 2.25% rates. And September 7th is supposed to be the next. So we started at 0.25 and now they're at 2.5%. Obviously they sell that money to the bank and then the bank does what they do on top. So fixed rates right now, 5-year, you're looking at anywhere from kind of high 4s to mid 5s. Depending if you go to the big banks, you're gonna pretty much be in the 5s, and some brokers can get you under 5. Those rates have slowly started to cool off. September 7th is the next Bank of Canada meeting. There's a lot of, again, we talked about this last week, a lot of talk out there on either a 0.5 or a 0.75% increase. That's still obviously a question mark. Personally, I think they're gonna do another 0.5. But whatever they do, my belief is that that's going to be it for the year, and I'll get into that in a second. I just want to touch base on the inflation because obviously that's another big topic right now. June, we peaked at 8.1 and we are currently at 7.6. So it's come down 0.5% on that CPI inflation number. Is that on a downward trajectory or taking a breather? Optimistically, I'm going to assume that we have peaked, and what they've hopefully done with the rates has assisted with that, obviously, and that we're going to slowly trickle back down. I do think they will, once they see whatever trigger points they're looking for in the market with rates, that they're going to start pulling the interest rates back down. But at this point, I think they're going to go one more in September. Let me just get into the forecast here. I think they're going to go one more in September, which is going to be, I think, 0.5, but could be as high as 0.75. I don't think they're going to do another 1%. So typically what we do as well, as everyone knows, is follow the US. So the US on their last meeting said we're going to follow guidance from now on. So we're just going to, our path is done, and we're just going to follow the numbers. And if we feel we have to adjust up, we will. If we feel it's time to adjust down, we will. So it's kind of up in the air right now. So my guess is we're going to do this one more in September, and I think they're going to do the same thing. Personally, I believe they're going to stop. What are my notes here? Yeah, I do believe, so with that, that's that. I think they're gonna stop after what they do in September with the rates for this year and watch. I do believe my forecast here for the market, I think we're gonna see an uptick. In the last week, a lot of the listings that some of our clients have been watching, our buyers clients, have had a lot more activity. Offers coming in both our Vancouver and secondary markets. So there is a climate out there right now of kind of uplifting activity on listings. So I do believe that the rates are going to hold in September. They're going to do one more and then hold, for the rest of the year. As we all know, rental increases have been huge since they started increasing rates as well, really all of 2022 so far. We've got a listing right now, 1 bedroom in the West End was rented at $2,095. The tenant left to move out of Vancouver, and the new tenant within a week came in at $2,350. So that's another $3,000 just over a month or a year, for that seller. So I think as the rates stabilize, I don't think it's a matter, at the bottom end of the market, it's always a matter of affordability, of course, with rates. But I think as things stabilize, that shock factor of why the majority of the market holds back and watches is going to diminish. And what has happened to benefit the market, from an investor standpoint, rental rates have gone up quite substantially. So those rental units, I do believe, are going to start picking up again, which is typically entry-level stuff. So those first-time buyers are going to be fighting with those investors again, I do believe, before the end of the year. And we're going to see a lot more saturation come closer to the end of the year, specifically with smaller investment properties. But just as that peace of mind eases that, okay, there's a chance they're not going to raise again, or there's a chance that, and I'm speaking about interest rates here, that we're going to be flat for a while, or there's a chance that they're going to reduce again. As long as it's no longer set and secure that those rates will increase, that will give buyers peace of mind. And I think that will then get them off the sidelines slowly but surely, starting with investors already being lured back because of such quick rental increases. That they're going to kind of bring the activity back to the market. So I think things are going to pick up in the fall moving forward. I think Bank of Canada is going to do one more increase. I'm going to say 0.5, and then they're going to hold for the rest of the year. So I think we're going to see some stability back. So that's my summer roundup. That's my economist crystal ball assumption for the rest of the year. And nobody knows, obviously, even us, surprisingly, but I think the writing is on the wall that the rate increases are slowing. And I'm just going to call that I think there's only this one more. I think with the rental rates coming and the rental rate increases slowing, that we're going to see more buyers jumping off the side. And then when we get that stability from the buyers and stuff does start coming, I do believe that will bring more listings into the market. Typically supply and demand, but because there's been so much pent up everything, we've got plenty of buyers right now that just would buy but aren't, because there's not enough inventory, there's no good inventory, there's nothing that they want, and they don't have a lot to choose from. Those people are going to have inventory to then choose from, and we will continue up again. So I'm seeing positive things at the end of this year, starting September, moving forward. Let's see if that comes true. This has been a blissful, what's this been, 9 minutes? 12 minutes. 14 minutes of just me finally not having to listen to anyone else budging in. I hope you enjoy it. Like, subscribe, little bell. We'd love to interact in the comments as always. So if you got 2 cents, if you think I'm totally out to lunch, if you think I'm an idiot, if you think I'm right below, and we'd love to chat about it. And with that, thank you for your time.
If you do have any questions or feedback, I would love to hear it.
Call, of course, 604-771-4606.
I can give you a whole presentation here on why to choose me, but I'm just touching on that now. So if you have any further questions, give me a call. Thanks, guys. Bye-bye.